Good morning and good evening, everyone. Welcome and thank you for joining us here today for this webinar as part of the USAID CEADIR discussion series. I'm Mikell O'Mealy, and our topic today focuses on sustainable land management in Asia, particularly in Southeast Asia, where in many places economic drivers, climate change impacts, and various other forces threaten the health of forests, agricultural lands, ecosystems, and the communities and economies that they support. We have two global thought leaders with us today who are working at the leading edge of these issues, supporting countries in achieving their climate change commitments, Paris Agreement, and helping corporations, investors, businesses, and farmers adopt new practices and deploy finance for climate-smart agriculture and forestry. Before introducing our speakers, I'd like to share a little information about this CEADIR discussion series. CEADIR's full name is Climate Economic Analysis for Development, Investment, and Resilience, and it's a 5-year USAID-funded project that is helping countries to scale up low-carbon, climate-resilient development. CEADIR supports countries in conducting the economic, financial, and other analyses needed to make the business and economic case for taking strategic climate actions. As part of the CEADIR project, this discussion series engages public, private, and civic sector leaders from around the world in exploring the most critical issues related to climate change, clean energy investment, and sustainable landscapes management. And through connecting with global innovators and practitioners such as yourselves, all of you joining us here today, we're able to share and build on each other's experiences and in the process become more effective as a global community in our collective efforts. For our agenda today, I'll give a quick introduction to set the stage for our topic and then turn it over to our first featured speaker, Bo Damon, who is a natural resources officer focusing on climate change and bioenergy with the Food and Agriculture Organization of the United Nations. Bo is joining us today from Bangkok and will highlight priority actions to scale up investment in climate-smart agriculture in Southeast Asia. Then we have Rachel Ziedick, Director of Sustainable Programs at Control Union, who is also joining us from Bangkok. Control Union delivers global inspections, certification, and assurance programs in 73 countries worldwide, including 100 commercial certification programs in agriculture, textiles, and environmental and social standards. Rachel works with many of the largest multinational corporations and supply chains in Asia and globally, and she will share insights on the drivers and incentives that companies have to adopt climate-smart approaches in agriculture and forestry in Southeast Asia. Then, the most important part of our event today is an open forum during which we'll ask for your questions to Bo and Rachel on these issues, so please be thinking about what you'd like to ask and be ready to type in your questions using the webinar comments field. So, to set the stage, I'd like to take us back briefly to the landmark Paris Agreement in December 2015, when countries agreed to significantly reduce greenhouse gas emissions in the energy, land use, and other key sectors as part of our global response to the threats posed by climate change, aiming to keep a global temperature rise this century well below 2 degrees Celsius. These country commitments, which are called Nationally Determined Contributions, or NDCs, are particularly important in Asia, which is a powerhouse of global economic growth and which accounts for the largest regional share of greenhouse gas emissions globally. Countries in Southeast Asia are also among the world's most vulnerable to climate change impacts, which disrupt economies, destroy communities, reduce food and water security, and threaten lives and livelihoods in the region more and more each year. To highlight a few NDCs from countries in the region, here's a snapshot of NDC targets that the governments of Indonesia, the Philippines, and Vietnam have committed to. And you can see that each country has committed to significantly reduce greenhouse gas emissions economy-wide, providing a target for the reductions they aim to achieve by 2030, using both their own funding and resources, and those are the unconditional targets noted in this slide, and also using additional funding and resources from outside sources, and those are the conditional targets in this slide. Within these NDC targets, Indonesia and Vietnam specify emission reductions for agriculture, forestry, and land use, which is often referred to as LULUCF, and you'll see that acronym in the slide as well. And the Philippines included land use in its broad mitigation target, but did not provide a specific agriculture, forestry, or land use specific target. So you can see that each country developed their NDC targets and focused them in slightly different ways. So overall, these are big commitments to reduce greenhouse gas emissions very significantly in the next 10 to 15 years, both without and with additional support, in order to mitigate and reduce global climate change and help countries adapt to its impacts. And private sector leaders in the region have embraced the business and economic case for ambitious climate action also. In the forestry sector, for example, countries have committed to move toward net zero deforestation in key commodity supply chains by 2020, working with the Tropical Forest Alliance 2020 group. In food production, agribusiness leaders have pledged to make 50% more food available while reducing greenhouse gas emissions 50% by 2030, working with the World Business Council for Sustainable Development. And increasingly, regional and global markets are calling for commodities that are certified as sustainable. And along these trends, we're seeing that leading banks, investors, and companies are beginning to develop climate-smart products and strategies in response. In Asia's dynamic markets, however, these private sector leaders face multiple challenges to achieving their climate-smart goals, while at the same time, national and subnational governments are seeking financing to promote and accelerate sustainable land use management. And as a result of this disconnect, public and private sector leaders are many times missing opportunities to meet their targets, to reduce climate risks, to support local job creation, and to foster greater societal health and economic well-being. And as we look ahead to next year, 2018, when countries will take stock of progress made under the Global Paris Agreement, it's critical that we identify opportunities now for greater public-private sector collaboration in order to mobilize investment and finance at scale for these critical issues. In late March of this year, nearly 90 regional leaders came together in Bangkok to do exactly that, representing leading corporations, financial institutions, investment groups, small and medium-sized enterprises, commercial certification schemes, and governments in the region. These leaders identified priority needs and opportunities to accelerate investment for climate-smart, low-emission production of agriculture and forestry products in Southeast Asia's largest value chains, including rice, pulp and paper, aquaculture, palm oil, coffee, tea, focusing on the key markets of Indonesia, Philippines, and Vietnam. This workshop was sponsored by the U.S. Agency for International Development and co-hosted by the United Nations Food and Agriculture Organization and the Asia Low Emissions Development Strategies Partnership. And it was the first time that top government officials and private sector leaders had come together at a regional level to discuss what country climate change commitments mean for the private sector and how those targets can and will create new investment opportunities aligned with more sustainable land management in Southeast Asia. And we're going to highlight key recommendations from that March event today, and very much look forward to hearing your thoughts, perspectives, and experiences working on these issues. So again, please be thinking about the questions that you'd like to ask when we get to our open forum. And with that, it is my true pleasure to introduce Bo Damon, who will share recommendations from the March workshop and highlight priority actions to scale up investment in climate-smart agriculture in Southeast Asia. Bo has worked for the last 12 years as a natural resource management specialist for the FAO, focusing on promoting equitable, climate-resilient, and low-emissions development in the region. He has experience delivering policy and field-level technical assistance programs on climate change adaptation and mitigation, as well as renewable energy development in over 15 countries in Southeast Asia, and the Pacific. Most recently, Bo has been coordinating the implementation of FAO's work programs in 4 countries in the region for the global program Integrating Agriculture into National Adaptation Plans, which is supported by the German government and implemented jointly by FAO and the United Nations Development Program. And with that, Bo, I'll turn it over to you.
Thank you, Mikell. So just briefly to get underway, a short introduction to the Food and Agriculture Organization. We're a global organization that supports our member countries to eradicate hunger and ensure global food security. And sustainable natural resource management is a core part of our mandate. On the issue of climate change, FAO provides a range of support to member countries at global, regional, national and local levels, ranging from supporting member countries engaged with UNFCCC processes to facilitating global and regional platforms to coordinate action on climate change. At the national level, we are also supporting member countries to develop implementation strategies for priority actions related to the nationally determined contributions under the Paris Agreement, specifically as it relates to priorities in agriculture and land use. And as Mikell mentioned, we also implement field programs designed to support these strategies. So this activity that we partnered with USAID is very much in our mandate, particularly in supporting regional dialogue on issues of importance to agriculture and climate change. And what I'll do just now is provide an overview of some of the challenges that were highlighted by the participants during the workshop. And one of the core challenges that came out quite early and prominently in the discussion was that the agribusiness, small and medium enterprises and smallholder farmers have limited access to finance to adopt sustainable practices such as climate-smart agriculture. And part of the reason behind this is because lending enterprises, banking sector, perceives lending to SMEs and smallholder farmers in these sectors as relatively high risk. And on the flip side of that, we found that lenders and also large multinational agribusiness companies are still coming to grips with how to better incorporate sustainable practices at the field level, such as climate-smart agriculture, into their investment decisions. And this is leading to a lack of finance for these types of practices to be implemented on the ground. Another challenge that was raised during the meeting was the issue of communication. It was noted that this workshop was one of the first times that high-level representatives from government and the private sector, and then also small and medium enterprises operating at the local level, had an opportunity to exchange views on these issues. Part of the problem that was identified as part of this communication issue was also that governments and private sector, they tend to talk in a different language. So the language of policy and strategy does not necessarily match up with the way the private sector thinks in terms of bottom line investment opportunities and financial sustainability. And what this leads to is an absence of opportunities to build a stronger business case for sustainable practices such as climate-smart agriculture. Two related issues that were also raised. One on capacity, particularly of small and medium enterprises and smallholder farmers, to collect, verify and report farm level data, both on adaptation related activities but also on mitigation and emission reduction activities. And also at the national level, it was also acknowledged that there is still limited capacity on the part of government to aggregate this information and report it in a way that can be useful, for example, monitoring progress against commitments made as part of the Paris Agreement. And then related directly to this is the issue of data and the general lack of systematic ways at this stage to aggregate, report and verify emissions reductions and other activities from agriculture and forestry commodity value chains. And while there was a number of good examples that were discussed during the workshop, it was generally acknowledged by the group that data was a key barrier in terms of unlocking the potential for private sector investment, and also government initiative to adopt sustainable practices and report in a way that can facilitate scaling up. So out of this discussion, the participants from government, from private sector, and also from small and medium enterprises and farmer groups identified some priority actions as takeaways from this workshop. And they identified a number of key actors to undertake these actions. In terms of finance, there was a feeling it was a shared responsibility on the part of government, central banks, donors and development partners to develop instruments to de-risk investments in climate-smart agricultural practices through measures such as agricultural insurance to protect farmers against crop losses, and also, for example, partial credit guarantees to cover the upfront risks and costs that are borne by farmers in adopting more sustainable practices. In terms of communication, there was a priority action identified for the donors and development partners to work as a convener, as an intermediary between government, private sector, and also farming communities to facilitate more regular dialogue between national level policymakers, business and smallholder farmers, partly to facilitate the sharing of best practices, but also to build the business case for these types of practices, to build confidence within the private sector community that is interested in investing in supporting both country governments and farmers collectively to support commitments under the Paris Agreement, to build that business case in terms of the technical and financial feasibility of these sustainable climate-smart practices. In terms of capacity building, there was also actions identified for donors and development partners, specifically to strengthen collection, measurement, reporting and verification systems for the agriculture and land use sectors, and also to identify opportunities for private sector to adopt environmental, social and governance standards that integrate sustainability principles and concepts related to climate-smart investment into their policies and lending policies. And finally, an action to strengthen capacities to adopt practices and in the process aggregate and verify emissions reductions and contributions to resilience. In terms of data, again related to the previous action, a role of governments, donors and development partners to facilitate data sharing platforms, and indeed there are already some examples that can be built upon developed by FAO but also other partners, so that producers and investors can better compare performance and monitor value chains and the performance in terms of both emissions reductions and other indicators. Also a role to build confidence in climate-smart agriculture through the provision of data, and finally to provide robust systems to aggregate, report and verify emissions reductions as part of sustainable practices implemented. And finally, in terms of policy, priority actions were identified by the group for governments and central banks to look at providing guidance and incentives for incorporating sustainability and climate-smart action into policy frameworks, and also to encourage adoption of such policies amongst private sector operators, including banks and lending entities, and also to investigate the potential for incentives or even penalties in some cases to promote the adoption of sustainable practice such as climate-smart agriculture, so that we move away from the business as usual case at the moment, where we do see unsustainable use of natural resources, and move to a more sustainable development trajectory.
and priority. Excellent. Thanks so much, Bo, for that great overview of the key challenges and priority actions for scaling up investment in climate-smart agriculture in Southeast Asia. Thank you. Next up is Rachel Ziedick from Control Union to share key recommendations and insights on the challenges and opportunities for mobilizing private sector investment for climate-smart agriculture and forestry commodity production, and specifically insights on the drivers and incentives that companies have in the region to adopt climate-smart approaches. And just as a quick introduction, Rachel is an internationally recognized impact entrepreneur with 20 years of global experience. She advocates very passionately for the advancement of smallholder farmers, small and medium-sized enterprises and agribusiness, women, and the environment. Her work has successfully commercialized responsible smallholder production models into economically, socially, and environmentally responsible value chains, supplying local, regional, and export markets. Her previous ventures have received accolades, including the 2010 United Nations Environment Program, United Nations Development Program SEED Award for Green Enterprise, and the 2013 Caterva Award for Sustainable Design in Commercial Agriculture. And with that, Rachel, I turn it over to you.
Thank you, Michael. So it's really nice to be here this evening. And I wanted to kind of start with a really high overview of understanding the kind of the perspective of what the private sector hears and sees. So by 2050, we're all under this, this sort of now as a buzzword, at least within the development sector and those of us who work within development, that by 2050, global food production must increase 70% to feed a population of 11 billion people. The slide one. We see that as opportunity. We see that as, okay, we need to invest $100 billion by 2030 or, in the next 10 years in order to have an impact on the 2-degree mark. And so we, from the development perspective, feel that climate change is now and this is urgent. And so from the private sector perspective, we see this as opportunity. And so just to, qualify you in some of the things that we're doing is that, we are actually now rebranded and we launched yesterday as Peterson Control Union. We're a family-owned company. We're still owned by the Peterson family. We were founded in 1920, so just under 100 years old, and we operate in 73 countries with 17 Asian offices. We work with primary production, food safety, food inspection, supply chain management, traceability, and trade facilitation. And very specifically to talk about Peterson Asia, which is doing a lot more work on the climate-smart area, we have a growing environmental practice in the EU and Asia, focusing on primarily design and verification for our corporate clients, and also doing a lot of work with smallholder farmers, which I'll talk about in a moment. And we're partnering to align traceability, transparency, and verification with new collaborative impact investment strategies. And so we are partnered, for example, with Triodos, which is the largest dark green investment fund in the world. So now it's a $1.3 trillion private bank from Holland. And they have very much a focus on green investment. And we have just and are about to announce our own investment strategy. So we are investing in incubation and micro, or what we're calling nano enterprise, of between $100,000 and 1 million euros, or 100,000 euros and 1 million euros. So we are putting our money where our mouth is as well, and as a company we have equity to invest, and so we see lots of opportunities in the countries that we operate in. So we're walking our talk right now, or we're trying our best, because we work across fresh fruit and vegetables, coffee and tea, cocoa, cotton, livestock and dairy, nuts and spices, palm oil, of course, rice. We're the largest certifier of better of rice and cotton in the world. So we have huge footprints in the regions that are growing these products, and also tobacco. We work in 16 countries with tobacco. And so last year, I designed a strategy for us that was incremental now to what we're doing, or fundamental to aligning to the core values of our family-owned company, which is that we would, focus on farmer first, so that everything that we are doing as a company, the driver for impact for us in new investment strategies, and in supporting our commercial clients or donors or NGOs or farmer cooperatives themselves, is to grow and connect 1 million smallholder farmers to markets, consumers, and investors. So now to kind of talk a little bit more about, this climate smart area, which everyone is really kind of baffled by, especially I think in terms of the business risk versus reward, sustainability and impact. And what does that mean? Because the concept of sustainability has become a buzzword. Is it sustainable? And how do we measure that sustainability? And I think that causes a lot of confusion for, one of the things that Bo mentioned about communications. I can speak to someone in the UN and they say the word sustainability, and then my definition of sustainability for the same business problem is a completely different perspective. So in terms of I've chosen to give you a really, really simple model of ESG, and this is how commercial finance is now currently looking at ESG, which is environmental, economic, and social, and so essentially governance. And so in this metric between all of this, economy, environment, and social community, you have sustainable development. And so this is how commercial banks are currently developing their ESG strategies. There is no single model that any bank or any private investor has aligned to. There is no metric for what is commercially sustainable, which has been one of the big challenges. And then when we talk about climate smart agriculture, what does that actually mean? Does it feel good? Does it look good? Or can we actually verify that there's actually been an impact from the way we've adapted what we're doing, or we've adopted mitigation strategies into the supply chain itself? So I tonight want to talk about two very specific supply chains that I think are the most interesting, or two of the more interesting models for Asia, which obviously is going to be AFOLU and timber products, and the second will be rice. So I'm going to start with AFOLU. And drivers and incentives is to improve risk management, traceability, and transparency, leverage leadership positions in the market. This is why companies are doing this. So that comes back to brand. I saw a question earlier about, CSR and PR. I think it's a little bit less about, CSR and PR in that context, but it is about reputation, and it is about leadership in these countries and in the culture of Asia business. Access export markets and price premiums for sustainably produced products, and new revenue. And always when you look back at the slide before, that economic driver, that for business is the number one driver. If there is not profit to be made, it may feel good, and it may be good PR, and it may be good for the reputation of the organization, but every executive, and I'm in the same boat, and I think many of you, if you are working in private sector or you're revenue driven, you need to be able to have money coming in to justify the investment. So whether the return comes from the short turnaround, or you've got a 3 to 5 year break even and profitability strategy, the revenue is still the number one driver for private sector. And so I want to mention, the demand for FSC wood, which is Forestry Stewardship Council. They were born from the conservation movement. They're tied to WWF and other really important conservation groups like the Forest Trust and others. And the demand for FSC certified wood from export markets that offer price premiums is a huge driver now. And CSA technologies like making briquettes from waste have proven to have financial gains. And so to clarify right now, the market for AFOLU is not just in furniture. It's actually, there's a much bigger market in Asia for wood chip and wood pulp and wood byproducts that are going into biomass. So right now the largest competitor in Asia for Asian biomass is actually Canada. And that's because it is certified. So Japan requires a certified supply chain for FSC wood. Korea does not now, but they are starting at a policy level to make recommendations that briquette that is imported from non-Canadian sourced markets, they are focusing more and more, I think, on aligning to FSC. We expect that policy shift to happen in the next 18 months from a commercial perspective. And just to give you an idea, Japan, less than 30 months ago, had more than 20 nuclear reactors, and all of them are offline. So we actually see 100% growth rate annually in the demand of biomass into Japan's energy sector from a sustainable source that must be FSC certified. So FSC for that means the forest is actually managed, and the chain of custody itself is actually managed. And I mentioned one other thing right there, which is the briquette. We're seeing really interesting nuance in how the briquette, the actual waste or the chip of the wood, is actually turned and packaged to be a more efficient energy product. And so forestry across the sector, we've seen a dozen new investments coming here into Thailand. We're seeing huge growth in the Philippines, potentially as well more growth in Indonesia. There's bigger issues there with land management, of course, and forestry management. And massive, massive growth in this and interest in Cambodia and Vietnam. So we're working with a few ventures in Vietnam that are super interesting, that do have FSC certified forests now, and are going through a really unique phase of growth from that $1-2 million growth stage as an operation into a $3 to $10 million growth stage. So the exponential growth is there on a financial level. And I'm happy to answer questions about timber production and the supply chains themselves that come. Rice is one of my love children at the moment, and it has been for 3 years. Just to give you a framework of its impact into climate-smart agriculture, Thailand is the number 7 overall agriculture. We know is the number 5 emitter from direct and indirect emissions into climate change. But Thai's rice production is actually the number 7 global emitter of greenhouse gases, and primarily methane. Rice is also the primary economic backbone of 150 million rice farmers. So beyond the economics, beyond the potential impact on climate change and climate-smart agriculture strategies, it's also part of the culture of Asia. So for me, this is one of the most fundamental areas of the focus and need for responsible investment into scaling responsible rice production or sustainable rice production. So those drivers and incentives for companies are protecting brand reputation and market share as consumer awareness and demand evolves, and new consumer strategies, and that's millennials. Millennials not in Europe or America, but millennials here in Asia who want to be part of something, and they want to not only have a voice, they want to have purpose as a consumer. So, what value could SRP, and for those of you who aren't familiar with all the acronyms, Sustainable Rice Platform is a UNEP platform that's been running for 7 years now. There's now 70 private sector members. Peterson Control Union is one of those that sits on the advisory council that helps to guide the private sectors and the development and also policy and research into how sustainable rice can be deployed across 10 countries in Asia. So what value could SRP's best practice have in a local community and for consumers, meaning from the rice farmer all the way to the consumer who's eating that rice? That work is being done to translate that value. Can we build purpose-driven production? Can we engage 150 million people as we continue to see more and more rice farmers leave the rural areas? So in economics, of course, it's not just can we produce something and get paid a higher price for it, but do we have the domestic workforce in our supply chain available to justify the expansion and the adoption of these programs and these practices into production? And will consumers pay more for rice with lower or neutral GHG and carbon footprints? We don't know. The branding hasn't been done yet. The PR hasn't been done yet. We've been working on some of the consumer focus groups now to better understand the perception of climate change in the food products that are produced in Asia. So it's still very, very early days in answering those questions. And of course, what role do consumers want or need to play? So that's, a lot of my focus now, and some exciting work is being done. We talk about climate from Agri, but I think one of the biggest areas that we're now talking about is the value of carbon and the drivers and incentives of CSA strategies that align now to carbon values. And of course, a lot of work has been, and of course, with REDD+. The carbon market in Asia, driven by palm oil industry, fell apart after some significant investments by some of the largest industry players in Indonesia and Malaysia on methane capture. So the drivers and incentives are carbon values. We've now had new agreements driven from palm oil on what does high carbon value mean. So that will also benefit the timber industry on understanding mitigation as well and conservation practices, and what the actual value of that land is if it's virgin land and has never been touched, and what is the carbon value. Carbon trade, of course, is common markets, and once again, biomass is that carbon itself is a reflection of biodiversity. And so there's those of us there's some very interesting conversations going on, on a square meter level, because this work has been done 10 years ago by research and policy level to actually evaluate what is the biodiversity in a square meter of land in different parts of the world. And so carbon itself, some of the challenges in being able to value carbon, there's a school of thought that is now saying that we can come very old school and actually say carbon is really about the value of your soil, and how rich it is, and how much life is actually in your soil, and how much have you conserved. And so we have no carbon market now that is a common market in Asia. From the private sector perspective, REDD has very limited credibility. It's not going to take off anytime soon, and we actually think, and we are seeing the movement and the work being done by the Green Climate Fund and other groups to actually align a whole new economic methodology which relates to biodiversity. And we're going to see an increased flow of green bonds, and those need an outlet for beyond ESG. It's great to have this flood of money. There is an unbelievable amount of capital from Europe, from within Asia, that is desperately looking for ESG-based investments. In fact, the amount of ESG money has doubled in the last 18 months, primarily driven from North America and Europe, things like mutual funds and bonds, looking for a place to nest their money with a higher than market return. And so if we don't have the businesses to absorb that capital, which has been one of the challenges that we're seeing and that came out of the work working with FAO and APT, was that there's a lot of incubation stage business, and there's a lot of growth stage business, but there's not a lot of that really mature business of $5 to $10 million that can absorb this capital. And so the money is sitting out there and waiting to deploy, and so one of the risks, of course, is where will that money deploy if there is not a legitimate source that will provide credible and verifiable impact in climate-smart agriculture strategies. And we have limited incubation and growth stage, as I've said, so filling that pipeline. And that's a concern for us in the private sector, because we're seeing more and more, and I'm having more and more meetings with people looking to deploy money. And meanwhile, even as an example, Triodos went from a $700 million bank in 18 months to a $1.3 trillion bank. So, you're seeing this exponential growth and people parking their money and looking for impact, but where does that money find impact? And so I wanted to wrap up with a graphic to kind of show you that, we're all familiar with the SDGs. Business is aligning to the Sustainable Development Goals. It's giving us a pathway. It's giving us discourse that we can align with developments, like Bo mentioned, being able to translate for each other. And this graphic actually was the dissection of the obviously the global top 17 SDGs. And what I wanted to point out to everyone is that at the very top of that, of course, is about collaboration, but at the heart of it, at the bottom of it, is not just climate action, but it's all about the biosphere. So the foundation of driving impact up at a social and economic level is going to be driven about, in my opinion, and those that we're working with, by the value that we put actually on not just conservation, but the value of carbon and how we earn that carbon in the food and the products that we produce and have high demand for, and consumer engagement. And I'm done, Michael.
Great. Excellent. Thank you so much, Rachel, for those really helpful, interesting insights on some of these key drivers and incentives for companies to adopt climate-smart approaches for sustainable agriculture and forest production in the regions. Thank you for that. So, and we're now at the most exciting part of our event, which is your questions and thoughts. And thanks everyone so much for the great questions that you have typed in. Please keep those coming by typing in your questions in the webinar chat box. And just to mention before we dive into this, we have more than 80 people joining us right now from more than 10 countries around the world, including from Indonesia, Cambodia, Thailand, Zambia, Italy, the UK, Canada, and the United States. So thanks so much for such a great group. This is a really, we're very excited for this discussion. So I'm going to pose two questions, Rachel and Bo, to you. Feel free to jump in that we've gotten from our webinar attendees, and then I'll pose two more right after that. So maybe think about these, try to give us some quick short answers, because I'd love to get to a number of questions in this great open forum. The first question comes from Peter DuPont from USAID Asia in Bangkok, and he actually asked two questions. So first, are there plans afoot to certify carbon-free commodities? And Rachel, maybe this is a question for you. And also, Rachel, maybe your thoughts on what was the feedback from private sector firms that attended the March regional workshop? Was there traction in terms of seeing a connection between their investments and the climate change commitments of countries where they have supply chains and operations? So Rachel, maybe you can jump in just a moment and share your thoughts on that. And then maybe Bo, a question for you from Helen Ding from the World Resources Institute based in Washington, D.C. How do you bring investment in smallholder climate-smart agriculture to scale? What are the challenges in practice, and how have you addressed them? So maybe, Bo, you can take that question right after Rachel addresses the question from Peter DuPont. Rachel?
Peter, carbon free is really hard. We're seeing a movement towards carbon neutral because you have direct and indirect emissions from both primary production of a product versus the processing of that product, the transport of that product, the packaging of that product. So there is very much a strong movement. There's nothing consolidated yet. Part of the work that we did on CEADIR was analyzing more than 30 certification schemes to also see how they're aligning in terms of creating standards in which companies can align to. And we still have a lot of work to go, but ICEAL is also going to be doing a lot of this work. So I think we're all, looking to them as well to align on how we prioritize standards to anything that's related to carbon neutral. And feedback from the event from private sector, to be honest, there is donor fatigue from the private sector, and it's extreme. So in their mind, they want to, if they're seeking finance, they want to get to it. They want to see momentum. And they don't necessarily want to have 20 different meetings. And this is their perceptions to us. I think they enjoyed the conference itself, and I think they enjoyed connecting because we talked about money. So in a long answer, great event and great day and great networking for them. But then at the same time, in parallel, they're like, where's the money?
Great, thank you so much, Rachel. And Bo, maybe the second question.
Thanks, Mikell. In terms of scaling up CSA, talking from our perspective in Asia, we have had some success. FAO, we work through our member country governments, and most of the large-scale successes that we've had have gone through these existing networks, particularly through extension services and providing, addressing gaps related to knowledge and information in terms of sustainable climate-smart agricultural practices, particularly those practices where farmers can see a direct benefit from their uptake, either in terms of enhanced productivity or reduced use of inputs. So we have some specific success stories in Vietnam and Indonesia and other countries in the region with respect to scaling up climate-smart rice production practices. But there's also additional barriers that in terms of looking for larger scale wins in terms of wider adoption of climate-smart agriculture, there still are a number of barriers to be addressed. Some of them, I think, are to do with policy. And, in particularly in Southeast Asia, there is a strong focus for food and agricultural policy to focus on staple crops and the primacy of staple crops. And what we've found and what the research tends to show with climate-smart practices is we need to think more about integrated systems and look at diversification as a strategy, both in terms of managing the landscape in a more sustainable way, but opening up opportunities for enhanced adaptive capacity to climate impacts, for example, and other impacts related to environmental degradation. So, there are barriers as well in terms of the way governments in the region think about, prioritizing staples as opposed to looking at more integrated approaches, which is difficult in a sense because it does require a certain level of coordination across government, which can be difficult. And finally, one interesting avenue in terms of scaling up CSA that was discussed during the meeting, and it's very much linked to changes in consumer behavior, is consumer demand itself. And if we look at the broader context of food and agriculture and particularly consumer demand and consumer preference for, let's focus on food commodities, we are seeing changes. We are seeing people move towards more protein-rich diets. We're seeing increased consumption of livestock products. We're seeing increased consumption of processed foods, and we are seeing reduced consumption of staples across the region. So consumer demand is having an impact already on the region, and it will be interesting to see if we can harness this discussion and the links with the private sector to maybe drive more sustainable consumer preferences that could open up spaces for climate smart commodities that flow down the value chain to producers and send the right signals in terms of incentives for to facilitate larger scale adoption.
Excellent. Thank you so much, Bo and Rachel, for those great thoughts. I'm going to pose two more excellent questions that have come in from our participants and leading practitioners joining us today. The first may be for you, Rachel. It's from Matthew Maltby of Winrock International, who is joining us from Cambodia. And Matthew is interested to hear thoughts on how to engage local, but very often large companies who are not necessarily driven by pressure from end consumers in export markets, how to influence them to adopt sustainable practices. So Rachel, maybe you can jump in with your thoughts on that. And then immediately after, a second question, and maybe Bo, this is a good one for you, from Martin Griezmans, who's with Recoft, calling in from the mountains of Thailand. Martin asks or comments that local or provincial private sector entities need more clear policy support to invest in, quote, green products and leverage funds to willingly invest in greening landscapes. So Martin wonders if in this forum we can talk about them as well as the large investors, them meaning kind of these local or provincial private sector entities. So Rachel, maybe the first question for you, and if you need me to repeat it, just let me know.
No, Matthew, it's a great question. Cambodia is also a really tough place because we're still seeing a lack of middle management capacity in Cambodia. But across the board, we have huge demand. Companies that see opportunity are responding, and they are stepping up. So I think, once again, it's about building domestic track record, and that will build a momentum in the local marketplace through local networks and business chit-chat and family-owned businesses. I think once we see, creating a tipping point of adoption in these models, and I think the biggest barrier for them in not pursuing something is that it's not something they know about, and they don't necessarily know as an entire sector that the opportunity exists. And then, of course, what is the technical barriers for them to adopt that practice, and then what is the investment they're going to need to bridge the gaps until they see a break even and a return on the investment that they're making, or they're going to have to require third-party investment. So that would be the second piece, is that most of them really, if they do need to raise capital to adopt these practices or to enter these new opportunities and markets, they really don't know how to raise money. And even if they're completely investor ready and they have everything together and audited accounts and they have a pitch deck and they have an executive profile, they're not fundraisers. They're not people who are necessarily gifted at going out to raise capital. So there's still a couple of different gaps there.
Great. Thanks so much, Rachel. And Bo, the second question for you.
Yeah, thank you. It picks up the question picks up a good point in terms of the disconnect often that exists between priorities at a national level that are made at a national level that then later have to be implemented on the ground, and sort of overlooking the fact that requires buy-in, participation, and also resourcing for provincial and local level government. It was something that was discussed, during the meeting, and it's something that we try to address in our programming. But it is one of the more challenging aspects of working to scale up practice across not only at the national level but really across the whole landscape. One approach that is showing promise, and it is linked to this issue of data systems and management and reporting and verifying action in the field, is how we can better harmonize reporting systems. You know, I mentioned that data and also communication between different entities is a key barrier in terms of scale-up. We have an example that FAO was working on at the moment in the context of REDD Plus, actually, in Bangladesh, where we've set about developing a national forest inventory system, and a key part of the process was to ensure that the data systems were harmonized at the national level across different departments, such as the Forest Service, but also the National Statistics Service, but then also at the local levels and provincial levels. And what we've seen through a process of developing these systems and ensuring that they're harmonized and that they interface with each other is that it's unlocking potential for action at the local level that is then able to be reported in a way that's meaningful for decision makers at the national level. And this is we're only at the early stages of sort of finalizing this system, but already we're seeing potential here in terms of just being able for local government and for national government to better understand what they are targeting, what the problems are, and being able for their systems and their data systems to communicate across scale. The opportunities that it's opening for sustainable practice is considerable. So that's one thing that we're really trying to focus on.
Mikell, if I can just chime in really quickly to mirror something Bo is saying, because there's always the perception that private sector has this all figured out, and they don't. So I think that there's a lot that we can still learn from each other, especially in terms of data. But really, even from a systemic level, most big companies, from small to big, really don't even have a starting point of, oh, okay, so I want to have a climate neutral, or I want to have a climate strategy, and then I need to put that into my systems and into my actual production chains and into my contracts. Really, it's rocket science. So it's not that the private sector has it all figured out and just doesn't want to share. It's that everyone is kind of working in their own dark room and then trying to figure it out on their own and not really collaborating very well.
Great points. Yeah, very, very true. Thanks to you both for your thoughts and insights on that. I want to pose two more questions, and feel free, Rachel and Bo, to comment on either or both, because I think you both have a lot of tremendous expertise related to both of these two questions. So the first is from Diana Gillespie. Thanks, Diana. Great to have you on the line. And her question is, in promoting low GHG or carbon-free and building the market demand for that, what parallels and lessons learned can be taken from the organic market and the free trade market? And Rachel, I know you've worked a lot on these issues, so please be thinking about your responses to that, and Bo as well. And then the second question is from Philip Rothrock. Thanks, Philip, for this great question. He asks, how can the environmental community help the investment community in identifying companies that would be good recipients for ESG funds? How might monitoring and the aggregation of data around sustainable supply chains be improved? And are there any particular metrics that should be prioritized for development? And Bo, I know this is something that you and your colleagues at FAO work on a lot, so I'd be particularly interested in your thoughts on this. So Rachel, maybe could you start us off on one or both of these questions?
Yeah, I mean, fair trade is still very much in its own niche, and it hasn't scaled, and those are issues of governance with fair trade. It's very proprietary how they work. So it's very difficult to scale a system when a very limited number of people. And I think that's the point here, is that we need to see, if there's 150 million rice farmers and we need to see 40 million of them adopt the best practice, not necessarily a certified product or supply chain, but if we need to focus on the best practices of reducing their own individual carbon footprints, then we need to see scale much more than we need to see, new niche or boutique approaches. Organic, of course, I'm a huge fan of. I mean, looking at the U.S. market, it's the only growth market we've seen in 60 years for family farmers in the United States. We're seeing huge potential across organics, being India and China are the two largest growth markets in the world, not even more than U.S. and Europe. So aligning organic with climate smart practices is very much a possibility. Organic itself, or EU and USDA organic, aren't following those paths yet. But I think that it relates more to consumer mindsets and how consumers are valuing the food that they want to eat and what they want to see in the trends in the future.
Great. Thank you so much, Rachel, for that. Very helpful. And Bo, your thoughts on one or both of these questions?
Yeah, I'll pick up on the second question. I think it's a good one, and it's also, I think, something that Rachel addressed very well in her introductory presentation. In terms of, what can the environmental community to help direct finance to, sustainable commodity value chains? I think it really does come down to turning an intangible into a tangible, and that's basically being done through better data management practices, throughout the value chain. There's a great deal of interest from private sector investors, I think, to start in allocating finance to green bonds, as Rachel mentioned. Already we're also seeing investment in impact bonds, and it was noted during the workshop that earlier this year that the World Bank has already developed retail investment products linking companies to the SDGs and achievement of goals under the SDGs. And this is a huge development, and also it opens up substantial opportunities to direct finance, not only to companies that are undertaking sustainable practice, but potentially also aggregated networks of smallholder farmers. And it's unclear yet under the Paris Agreement exactly what the Sustainable Development Mechanism will be or what it will look like, but it could be a potential mechanism, a way to aggregate these types of dispersed networks who are implementing sustainable practices as a way to direct finance, to support this transition away from business as usual to more climate smart practices. So, just to reiterate, I think that the big gap at the moment is data, and that there is a great deal of interest in the investment community, and I think that the data is the best way to channel that to investments that are truly sustainable.
Bo, I'm gonna
Great. Thank you so much, Bo.
Can I chime
in,
Michael,
Rachel.
on one thing?
Yeah.
Which just ties into the previous question as well on smallholder finance, because I'm working a lot on that to try, how do we de-risk this money? Palm oil farmers need between $10,000 and $14,000 a hectare. It's actually not a microfinance loan anymore, but it's a large sum of money. Rice farmers need under $3,000 to $5,000 depending on the acreage they have. So it's this overwhelming task of how do we deploy big chunks of money in little tiny packets all over Asia. And carbon is really going to be the way that we do that, because the farmer themselves can have a carbon value in their own land management. And that comes back to, Bo's point, which is once again data. The more data we have, we can begin to actually look at those farmers within the landscape they exist on and de-risk at a landscape level and then trickle down to an individual level. So it's very early days in these methodologies and these economic designs. But I just wanted to echo what Bo is saying about data, because without it, we can't de-risk the money.
Very good point. And thank you so much, Rachel and Bo, for your really great observations and comments on that. We have a number of additional great questions that have come in, including from Joanne Potter from ICF, another great question and point from Martin Griezmans, and also from Jumana Asso. So thank you so much, everyone. I just want to say that the questions that we didn't get to answer today, we will prepare answers to those via email and send those responses to everyone who joined us today. in a follow-up email in the next week or so. And I'm sad to say, unfortunately, we are out of time for our webinar today. This has been a great discussion. Thank you, everyone, for joining us from around the world. It's been really good having you as part of this kind of global community working on these issues. And a special thanks to you, Bo and Rachel, for joining us and sharing your thoughts and insights with us today. So just to mention, a recording and a copy of today's presentation will be sent to everyone who registered for today's event and posted on USAID's Climate Links YouTube page also, where you can also watch previous CEADIR series discussions as well. So with that, thank you everyone for joining us. Let's continue the conversation and have a wonderful day there. Thank you.